Hello, this is Coach Mike from winningstockcoach.com. Going to go over my market overview for the trading week ahead, the week beginning November 24th, 2014. Want to start out just a reminder, this is a shortened market week. The markets will be open the normal hours Monday, Tuesday, and Wednesday. Thursday, the markets will be closed for the observance of the U.S. holiday Thanksgiving. And Friday, the markets will open at the normal time, 9:30 a.m. Eastern, but will be closing early at 1 p.m. Eastern. So, shortened market week, which historically, about 75% of the market holiday weeks in the markets the last 10 years have been down weeks. Most of them have resembled lower volume, but there still has been about 25% of them that ended up as up weeks. Going to start out here with the S&P 500, the SPX. We talked last week, and admittedly so, I even said that I just didn't think we would see that 2102, but with the pop we had in the markets this past week, it does look like that is possible. And like I've covered really since this second big green candle, that any up move I believe is going to be one that's kind of eked out. It's going to have a little bit of ups and downs on the daily candles, and it might not be as easy to read as those first couple weeks that have been huge. And that's kind of what we've seen, a lot slower since those first couple weeks. But we want to watch that 2102. I think we'll fall just a little short of it, but I think we'll still be within that 0.5% overall on it. The DJI, Dow Jones Industrial Average, over here on the weekly chart, we did get up into my first target area that I talked about last week. I still think there might be a little bit of a chance to get into this 1790 or 934.86. I want to switch this one over to the daily chart real quick. Even though I think there is that chance for the up move into that 17,934.86 area, I don't think it's going to come without a red candle on the daily. What I want you to watch is a support area 17,685.73. If for any reason we do get below that, then I'm going to be kind of watching more to the short side. I do think at this point, any pullback on Monday, your shorter term trades that you took long on the DJI into these target areas, you're close enough to them now that this is where you just say, okay, we had a good trade, let's get rid of those, the shorter term ones. Your longer term ones, it might be a time where you want to look at maybe trimming down the position size a little bit. That would be one option. Maybe leveraging the entire position within the money puts is another option that I like to do. And one other thing you could look for once you get a confirmation on the daily candles is maybe selling some covered calls. Shorter term covered calls is what I'd stick with for right now if you're going to sell covered calls on your long positions. Switching over now to the RUT chart. This is the Russell 2000, the small cap index. Since 4 Fridays ago when we closed this big weekly candle, we've gone sideways right at my target area. I don't really have reason to believe that since the last 3 weeks have really done nothing but flat, that we're going to see some big explosive move to the upside. But I do want to wait to see if we can get down below 1160 on the Russell before I look to go short in the small cap stocks, just so we can get kind of a clearer identification of a range break to the downside. That's kind of what I'm going to be waiting on for a little bit of confirmation. We kind of just entered a horizontal but maybe slightly down trend here, and I want to make sure through daily chart confirmation. I'll go over to that daily just to show you real quick. Had a little bit of wickedness, had that gap up on Friday that did just fill the gap and close above it. For me personally, I'd like to see us be able to get down in that 1160s area for the weekly close. And if we get throughout the week below our lowest daily close from last week, 1157.69, I think that would be a close enough resemblance of confirmation to begin short positions on small cap stocks. The small caps really haven't performed as well. I'm going to go back to the weekly chart, talk about this 3 weeks of sideways move. Over the last few weeks, the earnings that we've seen where a lot of the DJI and S&P 500 stocks have been very, very strong earnings. We've seen a lot of small cap stocks that if they did beat, they were very, very weak still, and a lot more percentage wise than a lot of people expected missing on their EPS estimates, and guiding down for the upcoming quarter. So that did cause the Russell not to really make that same resemblance we saw in the markets for the large caps and mega cap stocks. So keep an eye on the Russell 2000. I think that one's the most likely area to be looking at for short positions coming up. Moving over to the NDX, just kind of inching up now the last few weeks. I do think there's still that opportunity to get to that 44.05 area that we talked about the last couple weeks. I do think, though, that we're starting to resemble in the chart a lot of what we saw over here, so that we could have a down week, whether it be this week or maybe over the next couple weeks. And I don't think that down week will be the one that you want to go short off of, or the one where, the end of the run's over, the markets are going to crash. I don't think it's that at all. Actually, I think it could just be the next opportunity on just a slight dip that may last 1 to 2 weeks for one last up move, and I think it'd be that up move that gets into this 44.05. I don't think it's just going to do it in one shot. I could be wrong. That's still the target area I'm watching for. And just with the statistics the way they are for the holiday week, I wouldn't be surprised if we got that little bit of a pullback week this week and started out December looking fairly decent. But I do think as we get towards the end of December, we're going to start to see more consolidation, a lot less overall volatility towards the end of the year. And if I'm wrong on the volatility, I think that volatility will be more in the downwards movement if it is accelerated volatility. So going to kind of be watching that over the next couple weeks overall. We're going to stick with that same support point, 4,100 on the NASDAQ that we talked about the last couple weeks. That's kind of our swing point that we'll watch for things to be able to come down to and bounce off of should they want to. And another thing to point out with the NDX is about 20% of the charts that are contained in this index are actually not replicating this move right now. They've been moving quite horizontal over the past 4 to 5 weeks. So those might be ones that could hurt or help the progression of this chart overall, because the stocks that have run and replicated this, I believe that they're kind of topped out, a little heavy right now. And the way that 20% of the stocks that hasn't really moved out of consolidation decides to go, whether it be up or down, will really dictate to, in my opinion, will dictate how this chart really shapens up over the next couple weeks. This is Coach Mike from WinningStockCoach.com, encouraging you to always have a plan for your trades, wishing you the best of luck in the upcoming trading week, and God bless.